Titan now joins us from the sidelines of the GM Financial Conference. Bhaskar, hi, good morning. Good to have you on the show always. Some of the channel checks suggest that this festive season was better than last. Would you say the same was true for you as well?
Yes, it's been a good festive season between Navratri and Diwali if we were to track sales. Much better than last year. And for us specifically, the impact of the Golden Harvest scheme, there was a low base effect of last year, which has been enhanced this year. But quite apart from that, the rate of change of the growth is what is quite visible. For example, in watches, we were actually not seeing growth, and in fact partial declines and so on, which has been reversed, and it is coming back to low growth rates, not tremendously high growth rates. Jewelry, significant growth, and eyewear continues to grow. So how long this will continue? Of course, right now the season is good also because there's wedding season and so on. But I must add that our own experience is that you can't just sit and wait for growth, you have to drive growth. Therefore, new products and new formats, and also the e-commerce, e-commerce is growing quite fast, the business in e-commerce. So you have to combine everything and make sure that you're present in all those channels as well as several price points and segments.
Okay. Mr. Bhat, hi, good to see you in today. Considering that, e-commerce might be something that you would be looking at, and A&P spends could be something that you could focus on in terms of new products, etc. What is your margin outlook both for the watches as well as for the jewelry business in the second half?
We don't see any decline on account of this. In fact, the margins have been slightly better, as you've seen in the quarter results, and that's primarily driven by both by some cost initiatives, but also by premiumization and product mix impact in jewelry, which is diamond jewelry being stronger than the plain gold jewelry. Therefore, we do see no dilution. If anything, maybe a marginal improvement.
Okay, Bhaskar, if I'm not wrong, last month you had a con call in which you had said that there would be some weakness in earnings. Have you changed that view after the kind of festive season that you have seen, or would you still maintain that there would be some volatility in earnings?
Earnings weakness is primarily because of the first half. There was a significant drop in sales because of the Golden Harvest scheme having been withdrawn, and last year having been withdrawn in August, and therefore the growth having been very, very high. Therefore, the first half is where we have suffered. Making up in the rest of the year for that will be very, very tough.
Okay. So how much do you expect the Golden Harvest scheme to contribute in the second half? There are some estimates of around 400 crores in Q4.
Yeah, it is our estimate. I can't tell you very accurately because it's not yet, it is certainly not as attractive in terms of discount and, a return in a way to the consumer, because we are now compliant with what the law requires us to be. Nevertheless, the attraction is more of the convenience of purchase rather than the return alone. It will be in that league, what you just said.
No, I take your point that the first half was so weak that it will be tough to make up for that in second half. But purely comparing second half of this year to second half of last year, how would things look up?
I mean, we will certainly grow much better. It will be a very good growth because the base effect. Because Golden Harvest sales was not there, and that will be added on apart from the sheer sentiment driving growth. So it will be much better.
Okay, much better. And would you say that since the base for this year itself would get crunched, next year is going to be phenomenal then?
I do see. We were our CAGR was in the order in the 25% space over a 5-year period. So it had dropped, and it in fact declined because of all this, because of regulation and so on. Our belief, I mean, we are still a 4.5% market share player in the jewelry business, so the headroom is very, very high. So, and in watches, we continue to be a very large player, but growth is a challenge, volume growth and so on. So the blended growth rate, we should be aiming for at least from this current year's decline and placid growth rate, we should be aiming for at least a 15% growth.
Okay. Mr. Bhat, I just wanted to come back, with regards to the festive season. Can you share some qualitative or quantitative information with us? Say if you had to compare the festive season to last year's same time, even though they were at different times, any qualitative as well as quantitative information on the same?
I see the qualitative bit I just shared with you. The continual exploration of consumers for anything new. Walk-ins are always a challenge in the brick and mortar space because of the e-commerce, phenomenon. Therefore, unless you have new product which is significantly attractive to consumer at very, attractive price points, you will not get walk-ins. So what we have seen is our emphasis on new product, which is Divyam, for example, in jewelry, and the new Raga collection, Moonlight collection in watches, has brought in those footfalls into our stores. The not so much consumer insight, the behavior really is price is no longer a big issue, which is people are willing to spend provided you have something different and something attractive. And our brands are in that mid-market space are very strong, and we have the network in place. However, e-commerce is a completely different phenomenon where again we are seeing significant activity both of browsing, understanding, exploring, and of course a very small conversion in terms of purchase. But that is going to be more so in the future. Again, there we are seeing an uptick in average price. It is higher than the average price in the brick and mortar space. For example, in watches.
Okay.
People are buying more expensive watches on the net, which is a little counterintuitive. But it is because the kind of people who are browsing are those who have probably not made the effort to go to a store but are still interested in the category.
Yeah, that is true, Bhaskar. So for watches division in particular, it contributes what, about 20% for you now? What is the margin outlook, and what is the
the watches division is about 23% of the total.
20 to 23%, yes. So would it remain at the current levels, and what's the growth outlook?
I mean, it is not growing as rapidly as jewelry, and if anything, it will only decline in its contribution. But it's a high margin business, so, and it's a very large volume business. We sell about 15 million watches, and therefore 15 million consumers come into our fold every year. And there's a large ownership on the ground.
Okay. Just one quick last question then, Mr. Bhat. You got me quite intrigued about the e-commerce bit. Just wanted to ask you, what was the difference of sales between e-commerce and brick and mortar for you this festive season?
No, I think the growth rates in e-commerce are like 4x and all that, but the base is very, very small. So, doing 100 crores in a year where for a 13,000 crore company is no big deal. But the base is very small. But we do feel that this will be our presence. I mean, for any lifestyle brand, I think it is not merely the business, it is the presence on the net, in the social media and all kinds of browsing possibilities. You have to be there and create interest for your category and for your brand, not merely for the business, because the business model has to be an omni-channel play. So where he buys or where she buys should not matter to you, but where she sees your brand has to be very strong on the net.
All right, Bhaskar, point taken. Thanks a lot for your time and good luck for the rest of the year. That's Titan.